Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Minash. On today's show, we're talking about how the sharing economy continues to create and uncover new business opportunities to better utilize latent assets that are sitting idle. The idea behind today's episode came to me from one of our listeners. Hayden in Atlanta shared some details on the topic of today's show. So thank you to Hayden for keeping your eyes open to what's happening in the marketplace. The latest opportunity is a new company called Y Hotel. Apartment building and condo developers often have a number of vacant units upon completion of the building. The developer ultimately wants to rent or sell these as soon as possible, but these vacant units are costing them money each and every day. The developers are not in the property management business, and they don't want to put long-term tenants into vacant units that they ultimately want to sell, and they certainly don't want to be in the hotel business. It's far too labor-intensive. The folks at Y Hotel will partner with a condo or apartment developer to take a percentage of their vacant units and make them available in the short-term rental or hotel market. Y Hotel manages furnishing the units, they handle the nightly rentals, and they handle the day-to-day cleaning and management of the customer experience. The value proposition to the end customer is they get to stay in a brand new luxury condo building with modern amenities. By establishing a brand and setting a high standard for quality of finishes, they address the very common customer objection over the wide variation of accommodations that you find on platforms like Airbnb and VRBO. Y Hotel solves a problem for the developer by giving them a stream of income during a period where they have vacancy and high holding costs. They also solve a problem for the end customer by delivering a high-quality finished product at a competitive price. So far, the company has locations in Seattle, Washington, and Arlington, Virginia. They have a third location scheduled to open shortly in Virginia as well. So far, Y Hotel is a small player, but it's a unique and innovative business model. The folks at Y Hotel are obviously making a capital investment in the furniture and fittings, and the apartment developer is contributing the vacant units on their side of the deal. Profits get split between the developer and Y Hotel according to a formula that's negotiated between the two parties. In an earlier press release, Bao Wang, president and co-founder of Y Hotel, says, "We go into large, newly constructed multifamily buildings and we take about 50% of the units to operate a temporary pop-up hotel." And he notes that Y Hotel aims to have 100+ units in each pop-up hotel. As the building fills up with long-term residents, they bleed down the number of units. They might start off with 150 units, and as the building fills up, they go down to 130, 110, 80, 50, and then eventually pull out of the building. But it's also a turnkey operation. They manage 100% of the operations within the building. They have staff on site 24/7, and they're responsible for fully furnishing all the units with everything from couches, TVs, pots and pans, anything that you would use if you were living at home. The first property opened in the Inner Harbor area of Baltimore. And this was the result of a partnership between Monument Realty and Y Hotel for 158 of the building's units. The 347-unit property offers apartments with private balconies, an outdoor rooftop pool, a rooftop lounge, a game room, theater room, a fitness center, and a business center. Today, that property is no longer part of the hotel portfolio as it's been fully leased. One of the criticisms of short-term rentals is the increased traffic of hotel guests mixing with permanent residents. Residents often raise concerns about security. Now, Y Hotel has full-time staff on site, just like a regular hotel. But these pop-up hotels offer an additional benefit to residents. Permanent residents of the building can have access to the hotel cleaning staff services at very reduced and competitive rates. If you have a building that's going to be leasing 20 or 30 units a month, the developer can be secure in reserving a portion of that inventory for a pop-up hotel. While each pop-up is expected to last somewhere between 8 to 16 months, the company expects to remain active in a single market over a sustained period of time in multiple properties. The company started operations about a year ago when they secured a $3.94 million seed investment round led by Camber Creek, followed by Revolution's Rise of the Rest Seed Fund, Mendaker, Metaprop, Working Lab Capital, Michael Shear, and a handful of others. On the podcast, we aim to keep our eyes and ears open to innovative ideas. And again, this one came to us from Hayden in Atlanta, so thank you, Hayden. Perhaps this gives you some ideas on other ways you can create a master lease agreement with an underutilized asset to solve a business problem. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.